Greg Williamson, Chief Investment Officer of BP America, is a pioneer in the pension industry. A former prop trader who has spent more than 2 decades at the oil company, Williamson has had a front row seat as companies globally diversified their mostly equity portfolios. He is a true believer that his ability to invest long-term gives him an edge in finding alpha. Still, Williamson had a lot to say about global monetary policy over the next year.
The big driver over the course of the next year will be the continued activities of the central banks. In the U.S. and in the U.K., we know that there is a focus on the central banks having met certain employment and growth and inflation objectives, and will start to withdraw liquidity from the marketplace. But in other economies, the ECB in particular, but in China and Japan, there's a continued interest to provide unlimited liquidity for a long amount of time. And the question will be, what liquidity provision or deprovision, in the case of the U.S. or the United Kingdom, might actually take precedence and be the focus of the marketplace going forward. If it is the fact that central banks continue to provide significant amounts of liquidity, there are going to be opportunities to own long positions, to hold securities in a variety of markets around the world. In the developed and the emerging equity markets, in the fixed income markets, sovereign and credit, in the agricultural commodity space, and in the hard asset space, simply because the money flowing in will outweigh any type of underlying fundamental condition that occurs. If there is more focus on the activities in the US and the UK pulling money out of the market, that in and of itself can create flows and opportunities for investors over the next year, where there might be less interest in owning liquid financial assets and more interest in owning hard assets, or even being short certain assets like fixed income and like credit. A short to midterm trade that's occurred and an investment opportunity that has occurred over the past really 3 to 5 years has been the energy play in the U.S. and the development of fracking, not only for energy itself, but for its impact on agriculture and input prices to agriculture, on heavy manufacturing, and we've seen a renaissance in manufacturing as the U.S. as a result, in energy transportation and rail transportation and pipeline and distribution characteristics and refining and marketing. All of those things continue to be short to midterm impacts that create investment opportunities and strong investment opportunities for those investors who are willing to focus on that short and midterm opportunity.